All right, welcome to the Explainer. Today we're diving into something that, looks pretty simple on the surface, but is actually the linchpin of the entire tax audit report. I'm talking about Clause 11 of Form 3CD.
So that leads us right to the big question, right? Is this just another box you have to tick on a form? Or is it something more? Something like the very foundation of the entire audit? And let me be clear, the answer to that question really, really matters. Get this wrong, and it can cause some serious headaches for both the CA and the business owner.
Okay, so here's our game plan. First, we're going to talk about why this thing is the foundation of the whole audit. Then, we'll get into the nitty-gritty and pull apart its three main pieces. What books are legally prescribed, what books you're actually keeping, and finally, what the auditor examined. And to wrap it all up, we'll cover the common mistakes and how to avoid them, so you can make sure your audit is rock solid.
All right, let's jump right in. Section 1, the audit's foundation. So why do we keep saying this clause is the bedrock of your tax audit? Let's unpack that.
Think of it this way. This clause is basically the auditor's formal announcement to the tax authorities. It says, hey, here's exactly what financial records this business has. Here's where they're kept, and, this is the most important part, here are the ones I, the auditor, actually looked at to form my opinion. So, in one fell swoop, this little clause sets the entire stage. It defines the scope and really the credibility of the whole audit.
Okay, let's move on to Section 2, prescribed books. Now we're getting into the real mechanics. Starting with the very first part, Part A, it asks a really simple question. Does the law actually require this business to maintain a specific list of books? And the answer to that is found in a little corner of the tax code called Rule 6F.
And the short answer is, well, it's a yes, but only for a very specific group of people. Rule 6F says that if you're in what's called a specified profession, you're a lawyer, a doctor, an engineer, an architect, even an accountant, then yes, you absolutely have to keep a specific set of books once your income crosses a certain threshold. We're talking the basics here: cash book, journal, ledger. And if you're in the medical field, you have a couple of extras, like a daily case register.
Now this right here is where so many people get tripped up. It's a huge point of confusion. If you're one of those specified professions, the answer to Clause 11A is a clear yes, and you just list out those books from Rule 6F. Simple. But for literally every other kind of business, the correct answer is actually no, there are no books prescribed for me. But, and you've got to hear this, that does not mean you're off the hook. Not at all. It just means the action moves to the next part of the clause.
And that brings us perfectly to our next section, maintained books. We're now looking at Clause 11B. This is the part that applies to everyone. This is where you have to lay out a full list of all the books and records your business actually maintains, whether they were legally required or not.
So you might be wondering, what exactly counts as books of account anyway? Well, the legal definition is, intentionally super broad and technology-proof. It's not just about paper ledgers and cash books anymore. It explicitly says it includes data stored on, well, pretty much any electronic device. A floppy disk, a tape, a server, you name it. And that, right there, has massive, massive implications for how we all do business today.
And here it is, one of the biggest practical mistakes people make right now. Your books are not just sitting in a dusty filing cabinet. They are your tally data, your QuickBooks account, your Zoho files. They're the electronic invoices spit out by your ERP system. They're your scanned documents. And if you forget to list these things, and crucially, if you forget to list the physical address of your server or the name and address of your cloud provider, then your reporting under Clause 11 is flat out incomplete. Period.
Okay, on to Section 4, examine documents. So think about it like this. If Clause 11B is the map of everything the company has, then Clause 11C is the route the auditor actually took. This is where the auditor says, okay, from that big list, here's what I actually looked at to do my job. This is your official audit trail.
And it is so important to get this. The list of books examined does not have to be the same as the list of books maintained. Of course not. The auditor isn't going to check every single piece of paper or every single database entry. That's not how audits work. They use their professional judgment, they use sampling to decide how deep to go. So that list in 11C is their official statement. It's them saying, this is the evidence I relied on. It literally is the audit trail.
All right, let's get to the really practical stuff. Section 5, Key Pitfalls and Best Practices. This is where the rubber meets the road. We're going to turn all this knowledge into action so you can make sure your audit is bulletproof.
So where do people mess this up? Well, it's usually the same few things over and over. You've got mismatched lists between parts A, B, and C. That's an instant red flag. You've got people completely forgetting about their electronic records and where the servers are. That's a huge one today. Sometimes the business owner just, forgets to tell their CA about some other software they're using, so the list isn't complete. And of course, the classic mistake of saying not applicable for a doctor or a lawyer who absolutely does have prescribed books. Each one of these seems like a tiny detail, but trust me, they can completely tank the credibility of your whole audit report.
So how do we get it right? It's actually pretty straightforward. For all the CAs out there, it really just comes down to good old-fashioned documentation. Follow the standards. Get that formal management representation letter from your client that lists out everything. Document your scope in your own work papers. And for you business owners, your job is simple. Be completely transparent. Give your CA a full inventory of every record you keep. Every piece of software, every cloud platform, the whole shebang. Because at the end of the day, the goal for both of you is to make sure those lists in Clause 11 all line up and tell one clear, consistent story.
And in the end, it all comes back to this one point from the official ICI guidance note. It says the auditor must exercise their professional judgment. What does that really mean? It means filling out Clause 11 is not just a copy-paste job. It's not data entry. It is an act of professional assessment, and it's one you have to be ready to stand behind and defend.
So, I'll leave you with this one final thought, one question to really think about. Whether you're the CA who's about to sign that report, or you're the business owner who's providing all the information. After everything we've just walked through, can you honestly say your Clause 11 disclosures are audit-proof? Really think about it. Thanks for joining us on The Explainer.